Hi, Jonathan York from Bay Financial Partners, looking at investment markets. President Trump again at it with the Twitter. Overnight he's fired his National Security Advisor, John Bolton, via Twitter. Again, a very sort of interesting move. This comes hot on the heels of the leaked story now that President Trump was looking at having the Taliban at Camp David to have a secret peace talks. Now that certainly raised quite a bit of criticism in the US because that is very close to the 9/11 anniversary, and observers from both parties have sort of highlighted the fact that having terrorists on US soil close to that date really is pretty insensitive. Trade talks with China are still ongoing, supposedly. They are making a little bit of progress, and it's just going to be very interesting to see how that sort of plays through. Certainly there appears to be a little bit of a softening from the US, in terms of the talks, but it'd just be interesting to see once sort of, they actually get together and see if they can actually put pen to paper and get a deal done. Because certainly both sides need it. Latest jobs data from the US was a little bit softer than anticipated, and potentially that sort of plays into the hands that the economy is suffering a little bit, and potentially the Fed may need to cut interest rates further. Now, certainly that would please the Trump administration, who have been, sort of banging on and criticizing the Fed, pretty vehemently, that interest rates are too high, they need to be cut, and that will be very good for the US economy. Interesting, Apple has released its new iPhones, and just been very interesting to see what the take up is, and really to see how that's sort of going to impact earnings over the next sort of 2 to 3 quarters. Especially, you still have this sort of cloud hanging over, obviously, China and their potential sales into China and sourcing of goods. Certainly would be very interesting to see if a trade deal was done with China, just really what the reaction of the US stock market would be. Most analysts expect it to sort of push on to fresh highs, and just be very interesting to see if that will sort of filter through into next year, obviously the election year, and that's going to be pretty important, especially for the Trump administration. Because certainly if the US economy was starting to contract and people losing their jobs, it'd be pretty hard to argue that they sort of made America great. Oil doing very little out there, still just above that sort of 55. It's pretty much range bound, sort of 55, 60 plus or minus a couple of dollars. In the UK, Brexit seems to be sort of out of one frying pan into another, and certainly the new Prime Minister Boris Johnson really facing some pretty strong criticism and pretty strong resistance as well. He's now lost 3 major debates and votes in the space of a week. Yet all of those are sort of backing himself into a corner, given the fact that he's come out and said he will not go to the EU and ask for a delay. The UK will be coming out on the 31st of October. The issue is that Parliament has now passed into law that a no-deal Brexit exit is not on the table. That cannot be put into place. That is illegal and is against the laws of the UK. And really, he just looks a little bit lost. I mean, he suffered again some embarrassments with further resignations from his cabinet. Even his own brothers resigned. Really, what was quite damning was some of the reports coming out now for the reasons for some of the resignations was the fact that more work was being done on a no-deal Brexit than it was on trying to get a deal done. And that maybe gives a reasonably good insight into the way that Boris Johnson's thinking and the way he wants to sort of push ahead and sort of bully his way through and get what he wants. The only problem is that that is illegal under the current laws. So he's now suspended Parliament until the 15th of October. 14th of October. That's only 3 days before the big EU summit to discuss the UK's departure. Here in New Zealand, we've got Money Week. Really quite interesting, with this sort of low interest rate environment, how investors and certainly retail investors, sort of mum and dad investors, are looking at earning income out there from their investment portfolio. There is that infidel bond out there, just over 7 years at 335, just over 10 years at 364 initially for around the first 15 months. Then it'll be reset at a margin over the 1 year rate. Now, if you're interested in that, call us on 0800 867 323. Just going to be very interesting now, obviously, with this low interest rate environment to see whether it does sort of give a little bit of boost to the housing market. Initial signs are that it may be a little bit encouraging, but still a long way to go yet. Now, obviously, if it does sort of give a bit of a boost to the housing market, that should, sort of feed through into consumer confidence and then sort of make everyone feel a little bit sort of happier and a little bit more sort of buoyant and confident about the next sort of 6 to 9 months. But obviously, looming on the horizon is an election next year, and that's going to be very interesting to see how that sort of plays through. Because certainly the current government's facing quite a bit of pressure out there. Really, a lot of their sort of policies have really sort of fizzled out or been, sort of very, very, very sort of slow to start. And obviously the big one, sort of Kiwi Build, has been a complete failure. So if you are looking for income options, so there's plenty of alternatives available out there. call us on 0800 867 323 or go to the website www.bayfinancialpartners.co.nz for lots of interesting articles, and we look forward to speaking to you soon.